stand up, stretch, do what you got to do. We're having a good time. We're looking through a lot here. This is another point that is a little tricky. So take a pause for a second. Just again, stretch, get some coffee, do what you have to do. Look away from the screen. Make sure you are taking care of that body. State and local tax refunds can sometimes be included in an individual's gross income, depending on the taxpayer's deductions in the prior year and the nature of the refund. So let's see how this works. Interest income paid by the state. So if a taxpayer receives interest income on a state or local tax refund, the interest income is always taxable. So same as you file your tax return and the federal government owes you money, but they don't give it to you for a while. So they give you interest because time value money and all that. Your money is worth more to you today than it is tomorrow. So you want that money. They give you interest. So we understand that now. Whether it's your state refund or a federal refund, either way, the interest that you receive on that is considered taxable. So first off, that's point number one. Not too wild there. Now, let's talk about the itemized deductions in the prior year, standard deduction in the prior year. This is something we will deal with much more when we're talking about itemized deductions, dealing with adjustments to income, all that stuff. So if this doesn't make 100% sense right now, no worries. Like I said, we will talk about many items throughout many different lessons. So if you itemize deductions, and if you're familiar with itemizing deductions, you know that on that Schedule A, which I memorized that now, Schedule A is the form of your itemized deductions. On that Schedule A, you can have, if you do choose to itemize, and you can either itemize your deductions or take the standard deduction. Again, that's going to be in a later lesson. But if you do choose to itemize, you can take your state and local taxes paid as a deduction. I'm going to say this slowly because this was something that was confusing for me early on. So if you choose to take that deduction, then you are getting a benefit. As such, if you receive a refund from your tax return, you are going to have to pay taxes on that refund because you're not getting a double benefit. On the flip side, let's say I took the standard deduction. So I didn't itemize, I didn't use my state and local taxes paid as a deduction. As such, I'm not going to have to include this in my income because I didn't use it as a deduction. So if let's write this out because this is something you will be asked this in questions and I want to make sure everyone understands. So you make $1,000 and you take a deduction of $500 for your itemized, and that is for your state and local. So you have a $500 liability, you pay it. Now let's say for whatever reason you get a refund, right? Well, because you took that deduction, that would be getting a double benefit if you somehow got a refund. So you're going to have to include any refund over this in your state and local taxes. Now the standard deduction in the prior year, if a taxpayer claimed the standard deduction in the prior year and did not itemize deductions, any state or local tax refund received in the current year is generally not taxable. This is because the taxpayer did not receive a tax benefit from the state and local tax payments in the prior year. I think it's a good idea to just be familiar with this. And why is that? Well, because you can't really ever get a double tax benefit for something. So if you took a deduction in the prior year, getting a refund for something, you're not going to be able to recognize that. Sorry. And lastly, federal tax refund. A federal income tax refund is not taxable on the federal tax return because that's money you're getting back. That would be a little messed up if you overpaid the IRS and then they made you include that overpayment in your tax income, that would be a little messed up. However, as mentioned earlier, any interest income paid is included in your taxable income. Lots of great stuff here. Making sure we're getting this down. And like I said, it's rewatch these as needed. There's a lot going on here for sure. You will get through it. Make sure you're practicing. All right, let's see a little bit more. Well, I kind of gave a prelude to that, but I love examples and I want to make sure everyone gets it down. If we itemized in the prior year, so if a taxpayer itemized deductions in the prior year and claimed a deduction for state and local taxes paid, any refund received from the state or local government in the current year is considered taxable income. Now, this is because the taxpayer received a tax benefit from the deduction of the prior year, so the refund is treated as a recovery of that benefit. Now, you can just straight up memorize that statement. You can memorize this, get this down. Do that, feel free. But also, if you want to understand it numerically, that's also not a bad idea, and that's why we have these examples. So an example here, in year 2, Jane itemized deductions and claimed a $5,000 deduction for state and local taxes paid. In year 3, she receives a $1,000 refund from the state. So you took a deduction, right, and you got a refund. So you only are getting that refund because you claimed that deduction. Since Jane itemized deductions in year 2 and claimed a deduction for state and local taxes, the $1,000 refund is considered taxable income in year 3. Now, you could really draw this out and show the complex calculation. I'm thinking of myself like a crazy mad scientist on a whiteboard. But this isn't that important. I'm not going to show a whole thing with that, but there will be some examples that in multiple choice questions we have later where I will go more into depth with this. Make sure you are understanding this. Now, standard deduction in the prior year. If you claim the standard deduction in the prior year, and like I said, these will be talked about much more significantly in our lesson on adjustments to income. Any state or local tax refund received in the current year is generally not taxable. Now, this is because the taxpayer did not receive any tax benefit from the state and local taxes in the prior year. Now, in year 2, for example, here we claim the standard deduction and we did not itemize deductions. Any refund we received, we are not going to have to include in taxable income in year 3. Nice and simple, right? Standard deduction, generally much more simple, and as such, everything else following it is a little more simple. Now, regarding federal tax refunds, they're not considered taxable income because the refund is a return of overpaid taxes. And if you overpay taxes, why would the IRS penalize you on that? It does not represent additional income. However, any interest paid, as we said, will be included. If in year 3, if Sarah receives a $2,000 federal tax refund, which includes $100 interest, because let's say the government took an extra few months to give it to her, $2,000 refund is not considered taxable, but the $100 of interest is taxable and has to be reported on your year 3 income tax return. Here is a nice little recap. I know we just went through that a lot, but if you want to just memorize this, feel free to do so. Nice recap there. Make sure you get these down for multiple choice questions and sims, both equally as important. Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.